What is up, everybody? This is Ryan with the Scale Up Show. Have an awesome guest on today. I have Julie Brinkman, who is the CEO at Beyond Pricing. Something really cool that Julie's done is took the company that was really struggling at the initial peak of COVID and led them to 100% year-over-year growth, multiple 8 figures. Really cool story. You're not going to want to miss this one. Some great capital efficient business principles that she's got in here, but some also just really cool things that you can take away that'll help you grow. Welcome everybody to the Scale Up Show. I have a very special guest with me today. I have Julie Brinkman. Julie is the CEO of Beyond Pricing, which helps short-term rental managers and owners the tools to grow revenue. And she's had a great journey. I mean, previously CEO of a HR startup, and on top of it, did some great work in senior leadership at Groupon. So Julie, welcome. Happy to have you on the show.
Thanks, Ryan. Happy to be here.
Yeah, and shame on me. I didn't know you were in my own backyard when we first started talking, which is cool because you live similar to where I grew up in the city, I should say. Not actually grew up, but grew in the city. So anyways, Julie, why don't we give everybody an understanding of where you're kind of at in the journey and a little bit about your company. And so we'll do a real quick revenue rundown. So can you give us an idea of where you're at in terms of a revenue range?
Yeah, sure. Thanks, Ryan. And, I like how you think Elmhurst and Chicago and downtown Chicago is we're neighbors. But I won't give you too much grief for living in the suburbs and ditching us here in the city.
Domesticated. Totally domesticated now.
Totally domesticated.
I broke my will down to do it, but now I'm domesticated. It's like housebreaking a dog.
The rats did it. As you mentioned, I was actually COO of an HR tech startup here in Chicago for about 5 years. Came on to Beyond about 2 years and change ago, so March of 2020. At the time when I joined, we had just crossed into the double digits million of revenue, which was an awesome place to be. Had recently done a fundraise with Bessemer Venture Partners, world-class venture capital firm based out in San Francisco. And so, for those of you who haven't had it etched into your memory, March 2020 was pretty memorable in terms of what happened globally to everyone, also to travel. And so pretty quickly, we went on a roller coaster ride of retraction. But then as May 2020 started rolling around, we really hopped on this, what I don't have a better name for it, rocket ship of growth. And we've been on it for the last, 2 years, about 25 months. Now we're well into the double digits in terms of millions on revenue. Obviously we're private, so I don't talk exact numbers, but have grown, 100% consistently year over year, which has been fantastic. And just a total, it feels like a ride up into the right. And with the market environment that we're in today, we are still, while we're still growing intensely, we've done this in a pretty efficient way. I'm sure we'll talk a little bit about that and how you think about investment and when and where and how to make investments. But yeah, super happy with where we are. It's been fun, and we'll hold the trauma aside from March of 2020.
Well, anytime you have 100% year over year growth for multiple years, that's like a good thing. So props to you for making that a reality, and congrats on the working with Bessemer. I've heard a lot of good things about them. So what's your primary go-to-market strategy, Julie, like in terms of revenue growth?
Yeah, so we have 2 really distinct functions. The world of short-term rentals, so the world of vacation rentals, I think over the last couple of years, most all of us have rented an Airbnb or a Vrbo, trying to get away from our houses, with schools being remote, work being remote. It's a wild world out there, and you have really 2 distinct audiences. You have the very well-known, hosts on Airbnb. These are usually up-and-coming investors where they're starting to manage one property and then just through word of mouth and doing well, grow their property portfolios. We have a whole bunch of those folks on our platform, and that is really, we've acquired them through a product-led growth strategy. And so where you have a self-service acquisition, trial, onboarding, and support, that's been great to see that growth. And then on the other side of the house, you have these professionals. So they're managing north of 20, 30, sometimes into the thousands of listings in certain markets. And that we have used a traditional direct sales model with inside sales, some outside sales, and using our marketing to drive demand inbound.
That's awesome. Okay, so it's basically like a double-sided PLG slash. Would you say it's enterprise or mid-market, depending on the revenue range?
Yes, and yeah. I mean, we really do see the layer cake between SMB, mid-market, and enterprise. I mean, we just signed one of the biggest property managers in the country here. The biggest private property manager, which has been great. And yeah, I mean, you see one population of hosts versus property managers, and you don't always, in a lot of product-led growth companies, you're acquiring users to grow into the enterprise. That's not really the case here. While you do have a Venn diagram of overlap where these hosts really do grow into professional property managers, it's not always the case. So I consider myself very lucky, quite frankly, to have two motions that we can push at the same time.
Yeah. I mean, now that you explain it, I can see it's definitely unique. Like we had Jonathan Finkelstein on from Credly, which is a little different because they had PLG where they would basically give credentials to people that took training certification programs, but then companies would use it too. So I imagine, obviously you got difference with you have someone like anybody, like a neighbor down the street wanting to rent houses, right? And then you got these big investors that have these massive groups of property. And congrats on the big win to have the biggest private in the country. That had been a good day in the office, huh?
It was a great day. Yeah, we're still celebrating. They're growing like crazy, and the nice is they're buying our customers, and so there is a ton of consolidation on the supply side of the house within property managers, and so we can keep everyone in the family, which is great.
That's awesome. Okay, how large is the team over there?
We're about 170 people across 33 countries. So when I started, I think we were closer to 50. So we've more than tripled the size of the team over the last couple of years.
Okay. And we talked about your solution a little bit. So anything else you want to add to that just for context purposes? I think you covered it pretty well, but I'll give you the space in case you wanted to add anything.
Yeah, I mean, I think, as hosts and property managers, there's a lot of solutions out there to get your listings in front of guests and a lot of solutions that are focused on guest experience. What we're really meant to do is help short-term rental managers and owners grow their business through dynamic pricing, getting to the right channels, owning the entire experience of guests on the direct booking side. So, that is a critically important part of your business in terms of really driving revenue and bottom line, which is what a lot of this show focuses on too. And so there are a lot of parallels between both SaaS and then running your own short-term rental business.
Let me ask you this, do you have any professional services stacked on top of the SaaS at all or no?
We have a little bit. So there are certain operations that don't have the capacity or bandwidth, and they want our expertise on the revenue management side. So it's not huge, but we'll offer that to customers that are looking for that expertise.
Okay, that's one of the things that first came to my mind because I could see you have probably a wide range of sophistication across your users, with some being super dialed in, ready to go, and then I could see some needing a little more hand holding. So.
Yeah, a lot of that happens in product too. So making changes and, it's algorithmic pricing. So those changes are happening automatically. Okay,
excellent. So how did you get here? So I know you rose to the ranks at Groupon and then you were the COO but how did you just walk us through your journey and how you got to this point? Because I love hearing these stories. I've heard everything from somebody starting a bagel shop when they first started to now the person's a co-founder at like a $4 billion value company I've heard the whole range. So I'd love to hear your story and kind of how you got to this point.
I love that. That's where I want to end. Not bagel shop, but wine and cheese shop. Wine and cheese. How did I get started? I was sick of being poor in college. Worked my butt off in college to get into the business program at Michigan and just wanted to come out swinging, having my own apartment and being able to afford nice things. Little did I know I could make more money bartending than I could at a white collar job consulting with Deloitte after taxes. But that's where I cut my teeth, was 10 years at Deloitte. I learned a lot. I learned a lot about working hard, working long, client service, quality, attention to detail, how not to manage people. I've made plenty of mistakes and managing, junior project members. And really, I thought I was going to die a partner there. I loved it. And then there was a day where the practice leader started talking about the growth of our business in particular. And he said that in his view, he saw it growing 3% per year for the rest of eternity. And, just I was like, wait a second, I can't build my career here. Like, I'm going to have to kill one of these people to get their book of business. This is not going to work. And so I went back to my desk, Googled best place to work in Chicago. Groupon had just gone public. It was number one. I applied for the role. And just like that, after 10 years of building my career at Deloitte, I took a job at Groupon. It was called a city manager, city CEO job. And so my job was to run these markets. I had the pleasure of taking over some underperforming markets in the South. And effectively what it was a glorified sales manager job. And so at the time, Groupon, we had not completely automated the distribution of deals. And so it was a lot of like, do you have the right inventory of deals to push to your audience? And we were just not great at closing deals. So it went from managing consultants to now managing salespeople at Groupon, which was a totally different game. And I learned a lot about how you can manage and motivate salespeople. And the whole reason, I thought Groupon would be great was because, as I just mentioned, I'd love to own a wine and cheese shop here in my little neighborhood. And I thought, let me get close to the local merchant. Let me figure out how they tick, what tools they use, and then I'll go do that in the next couple of years. But I got really, really addicted to growing a business and, setting strategies and hitting goals. And so Groupon sort of gained responsibility because we were hitting targets, then was jumped over onto the international operations side. We had grown through acquisition and had integrated none of it. So I had a bunch of fun integrating different parts of the business globally, came back over to sales, was running this really large team of both onboarding and then the East region in Chicago. I think it was 600 people. It was insane.
Oh, wow.
Yeah, it was really fun. But Groupon was at a roller coaster in terms of strategic direction of the business. Having gone public, there was a lot of scrutiny, a lot of leadership changes. And, being sort of in that middle layer of management, it was time to kind of get off and go to something smaller and see if I could really grow a business from an earlier stage. And that's what happened when I joined Hierology back in, I think that was 2012. No, excuse me, that was 2014. So they were, they just raised their Series B, couple mil in revenue. Everything had been focused on new business acquisition. I was coming in to run customer success, because basically they were the cleanup artists. And but that's, you're going to bleed cash if you can't get retention under control. Right. And it was quite literally like the classic B to C growth, where you have to get processes and systems and career ladders and all of that dialed in, customer cadences, put all of that together. Retention started to come up. New business, we sort of stalled, and I took that over. So I, again, sort of started kind of hungry hippoing opportunity where I saw the ability to do better, and then was promoted into a GM and then ultimately chief operating officer role. So back in, I think it was 2018 or so, 2017. Anyway, we grew the business a ton, super fun, really, just a lot of hard work and sweat, but I had learned that at Deloitte. I was bringing that to the table, and ultimately left when growth, the investors and CEO decided, look, we're gonna kind of dial down on the growth trajectory. We want to make sure we want to keep it, make sure we're cash flow positive, and I really wanted to stay on that high triple digit, high double digits, triple digit growth path. And so I went back to market, was really interested in finding a software company that had shown product market fit, super high reputation, VC back or a multiple investor backed. I was looking for a founder or a founding team that I could really work with. And then the whole like vertical SaaS nature of it sort of was happenstance. It could have been horizontal, could have been vertical. I just have happened to, my last 2 gigs have been in vertical SaaS. And so met David, met Bessemer, grew our relationship, and then ultimately started March 2nd of 2020.
Wow. Okay. So there's a lot of great things in there that's pretty cool. You want to open a wine and cheese shop, so that's pretty cool. That's not my biggest takeaway or anything like that. That's cool. I think that'd be fun. And I got to ask you, are you a red fan or a white fan? Totally off topic, but I'm just curious.
Yes, it depends on the day. I'm mostly a pink fan. I think if you ask anyone who hangs out with me.
Like rosé or like
Pinot
Noir?
Yeah, like rosé.
Okay, gotcha. I'm more of a Pinot Noir fan myself.
There we go. Yeah.
Anyways, we don't need to get off track, but just random thoughts from Ryan as we go through this show. So okay, so a couple things like. How many times did you get promoted throughout those times? I'm counting like probably, and I'm not looking at your LinkedIn profile, but maybe 8, 9 times as we go past over your Groupon / Hierology. Is that somewhere in Deloitte? Oh, there's probably in Deloitte too. So maybe like 10 or 12. We might be talking double digits. Is that about right?
Probably. I've never counted.
Okay. So like, here's the thing. How did you, because that's cool. I have a lot of respect for that. You got the Midwest, blue collar background, hardworking. So how did you make that happen? How did you keep making those jumps? Because what I heard you say is every job you kind of took on, you kept getting more and more responsibility. You hungry hippoed it. So what do you think was the key to making that happen?
Yeah, I mean, I think that really echoes back where my mom, I watched her when I was in middle school. She and my dad split up. And she had an associate's degree, so she had to go get a bachelor's and went to law school. Mm-hmm. I watched that all happen. And so I knew if I was going to get, I didn't want to ever be in that position. And so that I had to work hard. And I think I start with the premise that I have to prove myself and show that I can do something before I'm like, and now offer me the title. And that was really true at Deloitte, and before you got promoted, you had to do the job for like a year. Versus now it's like, we're going to reach for the title. I see a lot of like, we're going to reach for the title and then the skills will follow. And so I think if I had to summarize it, it's like, I let the results speak for themselves. So give me a minute and let me show you what I can do. And if you like what you see, then you can give me that title. And that's pretty much what happened across every role that I've taken.
That's awesome. So would you say, like, what would you say is your number one value as a person then? Is I think I have an idea on what it might be, but I'd love to get your feedback on what you think it is. Just gut reaction.
My value?
Your number one
like
value.
What I bring?
Well, no, I'd say core value as a person. Like what's one of your top values? Like mine are hard work, growth, family. Like those are some of mine as a person. So what would you say are your top one, two, three?
I think integrity is really big. So doing what you say you're going to do, and that is not just promises, but also results. Two, I don't think you can run startups unless you believe that anything is possible. And I don't want to say this is like optimism, because it's not just optimism, but it's like blue skyness. So there's something in me where I just believe that anything is possible. And I think third is like humanity, I personally have lived a lot of life, and I want to be myself at work, and I want to create a safe and inclusive environment for people to be themselves and live their full lives. And so like the sort of integration of family and work and me being the same person when I walk through that door versus when I'm on the show is really important. There's authenticity, I guess.
Yeah. That's cool. There's a lot of fakeness out there, so authenticity and realness is good. I thought you were gonna throw hard work in there. That's
Well, I
by
think it goes with integrity, you know?
Yeah, that's true. You could integrate that. Just the way you were describing it, of how you moved up the ranks, and so, but those are, I mean, integrity, doing what you say you're gonna do. That's super critical. And then I love the fact that you have anything that's possible. I think so. I wasn't in the startup world as long as you. I was in more of a corporate environment for like 20 years, and like I got beat into that 3% improvement kind of mentality. Even though I was like a sales leader, and they're like, okay, just go make shit happen, Ryan. Like no guidance, or just go make it happen, right? Like which I was always in like unknown brands with companies that had to grow with not a lot of infrastructure, but it was always kind of like, okay, incremental growth versus like, okay, well, why don't we just blow this up, right? You know, um, so it's interesting to hear you say that.
Yeah.
So like fast forward a little bit too. So that's really cool on kind of your advancement path and in how you moved up. How did you said you talked to David Bessemer, correct? And that's how you kind of started you got to know him, and then the job happened. How did that whole thing go down?
Yeah, so David's the CTO founder of Beyond, and so he,
Okay.
and
I'm
then
sorry.
Bessemer. No, it's fine. I said David and Bessemer, so I confused them. And then Brian Feinstein is the part. Brian Feinstein and Talia Goldberg were the investment team at for Beyond.
Okay, gotcha. Okay, so you
Yeah.
met the. Okay, this makes sense. And I was like, how did you go straight to the BC? And but you met. It sounds like you met one of the founders. How did you come into contact with them? And like, how did that happen? Could you seem very specific on what you wanted? So I didn't know if you like reached out to them or how that whole thing happened.
Yeah, probably if I'd done better research, it would have been more of an inbound. At the time, they were conducting a search, so they had just closed their series, what was called our Series A, and the CEO had resigned, and so they started an executive go-to-market executive search, and so True Search found me.
Okay. Okay, so that makes
Yeah.
sense. Okay, it's all coming together. So, one of the things that we can't bypass is that 100% year over year growth that you had, which is amazing, especially because you're not at 1 million ARR or 2 million ARR. So the larger you move up, we know the more complicated it can get. So, like, how did you make that a reality? What did you do to make that happen? And I know your team, right? You leverage your team, but like, how did you as a company organization, as a SaaS company, make that happen? Because a lot of people listening, I'm sure, would want to have insight on your mental approach and how you did that.
Yeah, I mean, for me, we're unique in that we're not a traditional subscription service. You subscribe to us, but we take a percentage of your bookings. And so we really do grow with the market, which is fantastic. But that is two steps removed from our controllables. We can control really two things: how many customers we bring on and how many customers we keep. So the first order of business, this isn't always where you start, but in 2020 it was where I started, which was retention. We were I walked into a tsunami, and customers were bleeding cancellations. Airbnb did this global refund, and all the hosts had to pick up the slack. So our customers literally could not pay their bills. And so we went on a really fast triage. Okay, what do we need to do from either delayed payment terms, get down the phone and just almost have a therapy session, what do we need to do from a product standpoint? We had thought that there would be, if we changed our cash collection from pay on book to pay on stay, that would really help property managers not bleed cash. I can get into why that was actually the wrong thing to do, but we were really just keeping our customers in mind. One of our core values is we go beyond, and we really mean that for our customers. We were there for them. And so at the same time, working with my CX leader to say, okay, now what sort of standards of management do we have? How do we talk to them? How often? What do we talk about? getting all of that really dialed in. And because there was this like sort of global chaos going on, I got the opportunity and the time to spend with the team and put a lot of this infrastructure in place that when you're on this rocket ship, you don't get the chance to do because you're always aiming for like sort of that next tranche of growth. And so it was sort of, you know, I feel lucky that we were able to put that in place. And so we're talking like cadences and QBRs and all of that good stuff. Looking at churn globally, not just for this one slice of the world. And then my attention really started to focus on the new business acquisition. Once it became not tasteless to sell, you know, it was like, okay, how do we show customers that they need this tool to tap into demand shifts? Because, you know, there would be markets that were closed and then open, and then all of a sudden calendars would get full. You know, I mean, people were literally booking same day. There was so much operational pressure on our customers and the prospects. And so, you know, how do we re-message our value proposition, get it to the right people in the, you know, making sure we are after the right you know, ideal client profile at the right time. So not at the, you know, you don't call a Florida property manager in July, like just don't do it. Like they're busy. So there was just a lot of sort of blocking and tackling, and then making sure we were diversified from a quota standpoint, that we had the right infrastructure for sales development. And then, you know, we did a raise. So the other things that I was thinking about, and this is sort of toward the end of 2020, is okay, where are the other vectors of growth that we're going to see? And one of the most glaring ones, which we had started, which was one of the premises we raised on back in 2019, was Europe. Europe is 30% bigger than the US in terms of total listing counts for short-term rentals. But Europe is like 160 markets, not one. And it is like, that's where SaaS companies like are like, you know, we're just going to march right over the Atlantic and put our flag here and it's going to work. And we had taken some swings at it, and it was growing sort of at a paltry pace. And so that's, we made some meaningful investment there in late 2020 and are now just seeing that business boom, which is really exciting.
Wow. Okay. So that's a lot, which is smart, because I remember going through some of the similar thing before I left my previous employer. We had to have a lot of those talks of like updated payment terms. There was a lot of details contingent on people being in the office, right? So there's a lot of pricing adjustments and payment adjustments. So you did that. You did kind of, sounds like right when you started too. You had to deal with all that crap, right? Like day one, like you're like, all right.
Well, it's like day 11, but yeah.
Day 11, right? But still, that's good, and that makes sense. How you dialed in your messaging, your QBRs, your alignment, everything. So it was almost like damage control from day one. Like you were doing the initial assessment probably of what the heck was going on with the company, but in damage control mode at the same time, right?
Well, it's like, how can you scenario plan? How many like people are never going to travel again, or people like there was infinite amount, and we were all trying to predict the future.
Yeah, which is crazy, because then people ended up traveling a lot, and a lot of people went to warm places because you couldn't like go to hotels anymore. So it ended up, it's just funny how it all worked out, you know?
Right. And now we're like, oh, duh. Like without, you know, having to go to work or school being remote, people are obviously going to go rent a bunch of air. But like that wasn't clear. You know, it started to be clear 8 weeks in, but. Okay.
So that's what you did there, right? To like reset the ship, and you said Europe is taking off for you now. Like more specifically though, so that's the damage control piece. Like what are you doing now? Now that things have stabilized, you're starting to grow, we're kind of getting past this, which who knows if we'll ever be past it, but this awkward COVID time. Like what's your number one growth strategy that you're leveraging for the company now? And like, you know, what's a framework for you to deploy that?
Yeah, I mean, there's not one, which I'm, again, really lucky here. So you have different segments of the business and different life cycles or maturity. When you think about where we started, which was dynamic pricing in North America, now we are past the like first mover advantage, a bunch of early adopters. Now it's about really executing the X's and O's of true salesmanship, inputs, market visits, outputs, conferences, you know, making sure your demand gen muscle is completely fleshed out. Europe, we are an early adopter and fast moving. And so it's about is getting out in front of as many people as possible and making sure we are, following on with all of the support and language requirements that we need in order to truly support our customers. You think also about, extending our solution. So really becoming a full revenue management platform is critical as property managers seek to grow their business. And the last bucket is, the product-led growth side of the house. You have, that is all performance marketing driven. And there's been a lot of changes in that world. I'm sure if you've talked to other PLG leaders with Facebook and Apple and all of that, that make that job a little bit harder. And you always have to be kind of tweaking strategy and making sure efficiencies are good. So there's like really 4 big buckets of different businesses that I have here, and the different sort of strategies we're deploying across each of them.
Okay. That makes sense. That definitely makes sense. So we're just about up on time, and I want to be sensitive to your time. So I guess let me ask you this, because you've had a really unique journey from consulting to startup, plural, right? So where do you see the future of tech going?
Someone asked me yesterday if I believed in technological singularity, which if you haven't, you should Google it. There's a bunch of sci-fi novels about it. Where do I see tech going? I mean, I think that's a really tough question. Where I see technology going in our world is the continued relying on technology to operationalize vacation rentals will continue. The pressure that we see with just automation and needing wherever you can to find time and scale wherever you can find it. Hopefully, we're also continuing in sort of more broad tech industry down the path of increased diversity, increased equity, increased inclusivity. As we were talking about, I think I am the first female CEO that I've ever worked for. So hopefully we can continue expanding the pool of folks that sit in my seat, and really like delivering value to the customer at the end of the day. I mean, I think you're seeing that also with the macroeconomic shifts. Those companies that deliver value to real customers in a real way will survive, and those that do a little horse trading and call it value they're probably not going to, be long for this world.
That makes sense. Totally makes sense. So where can people find you? Where can they learn more about Beyond Pricing?
Yeah, I managed to turn off all my social apps when I was working at Groupon. So I do LinkedIn, Julie at beyondpricing.com. I do respond, I get some emails. Most of my world is in Slack these days. You can find me in West Lakeview in Chicago, walking around the neighborhood with my kids and dog, drinking pink wine. Yeah.
And what about your company? Like, is beyondpricing.com?
Yeah, sorry, beyondpricing.com, as we were talking about. The right. Not beyond.com yet.
You're thinking wine and dogs. It's okay. It's easy to get distracted. Well, Julie, it was awesome having you on the show. I really loved hearing your perspective, and congrats on all your success after walking into a really big challenge. And it sounds like you turned it around. It sounds like you're taking off like a rocket. So congrats to you, and thanks for being on the show.
Thanks, Ryan. I really appreciate it.